The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we near the end of the month of October and close in on Election Day, we have a lot of economic data that is being released here, not only on Wednesday, but really over the next several days. We have a WASDE report coming up on top of the elections. Harvest is wrapping up. There's so many things going on in this trade. We saw beans and bean oil find a little support on Wednesday. Quarter wheat firm. Hogs continue to rock and roll as well, and cattle leaked a bit lower again. Let's talk about everything we're watching and have a conversation with Mike Zuzolo from Global Commodity Analytics. Mike, always good to talk with you, my friend. How are you?
Happy pre-election week, Jesse. Next week at this time, we will be talking a lot about whatever we're going to be talking a lot about.
That's a great way to put it. And I think that's a good place for us to start. We talked a little bit about this last week, and I'm going to pull up the latest Real Clear Politics poll that you sent us here for today. And just thinking about the impact of the elections on the markets, on commodities, exports, et cetera, et cetera. So what's some of the latest you're watching here, Mike? Let's dive right in.
Yeah, I wanted to get a little bit more defined on this whole situation because a lot of clients and subscribers are wondering about it. I'm guessing your viewers are too. And so get a little bit more specific in this week. We see in the last week or so, as President Trump was gaining and Vice President Harris was falling last week when we talked, they've plateaued. Both have fallen, but Vice President Harris has fallen more. And so for the first time since essentially President Biden got out of the race, President Trump is higher than Harris at this stage. And I think that's really made a difference in this pre-election posturing and positioning in the marketplace. I think this pre-election trade is mostly seen through the currencies as far as what's most important, both before the election and after the election, as far as a measuring stick, Jesse. And kind of what does that suggest right now before the election when it comes to a pass-through on the agriculture commodities in particular?
Well, let's talk about some of those effects on currencies. I'll pull up a chart looking at the U.S. dollar versus the Mexican peso. Let's use this to set up this conversation and talk more, Mike. What are you seeing? I noticed a few trend channels here, it looks like, on this chart. What are you watching right now?
Yeah, you notice the dollar is gaining once again against the peso. It made today, actually on Wednesday's trade, a fresh 2-year high. And this helps explain, I think, pretty well, Jesse, why this big, strong export sales boom that we're under in corn and beans is not being taken more seriously or traded more practically when it comes to the reaction by the futures market. And I think it's mainly, again, through this pass-through of the currencies. And I think this chart with the dollar making a new 2-year high against the peso really kind of shows us that it probably is very likely that Mexico is stockpiling, buying extra corn right now, China buying extra beans. We had fresh export sales again on Wednesday, unknown in corn, China, and unknown on soybeans. I think the other thing about this chart that kind of maybe helps, and you brought it up, that channel, notice how the dollar was starting to give way to the peso roughly 4, 5, 6 weeks ago. And what we've seen now is they're picking back up of that, trying to get into that channel again of the dollar going higher. And I did a pretty neat study of the last 5 elections. It wasn't very conclusive in terms of before the election, and what I used was where we opened up on the November of election year, where the November open was, and then where the dollar index was on the close 6 months later. So the last 5 presidential elections, we've had the dollar going higher into the election 2 times, going lower into the election 2 times, and sideways, I believe, in 2012. 6 months later, there are 3 occurrences where the dollar goes on higher and appreciates, 2 occurrences where it goes lower. So almost a split decision. But what's neat about it is that whether it went higher or lower, it was in a fairly straight percentage gain or loss. It was very tight, 4 to 7% gain or loss, or 4 to 7% gain, 7% gain or loss. So very narrow range of 4 to 7% on either side after the election. And I think that's what the trade's posturing for and worried about as the dollar scoots higher, because that Real Clear Politics poll is showing President Trump gaining at this stage of the game for another second week in a row since we've been looking at it.
And looking at some of the trends in the treasuries as well, just another chart for us to kind of accentuate your point here a little bit. I've been curious about some of the moves in the 10-year and some of the different treasuries and the dollar and things like that. What is this correlation chart telling us?
Yeah, and I like how you set that up because we've had another yet new record high in gold prices this week. Another, I think, touching the record high, if not getting a new Bitcoin record high in the bids and asks. And so those are the true and pure safe havens at this point, gold and Bitcoin. So those are going to be looked at very aggressively by me after the election, but put in a separate category because they haven't wavered as far as a safe haven, whatever reason it is. This chart helps us understand better why the dollar has been going higher. And we talked about this last week, that the bond yields, the bonds themselves are sinking. When the bonds go down, the bond yields, or essentially the market interest rate that you're going to be rewarded if you're a bond buyer on that rate, that coupon goes up. They move in opposite directions, the yield and the bond futures. So when the bond futures go down, the yields go up. When the yields go up, that attracts more investment. And that is why the US dollar, because it takes US dollars to buy US bonds. And so when this yield against the US dollar shows us right now on this 8-week basis that they're trading a plus 95%, that means they're essentially trading 1-to-1 in terms of positive and negative price action over the course of the last 8 weeks. So again, another transmission pass-through channel of how this dollar is strengthening for reasons other than what we explained with the peso, the Chinese currency, and I forgot to say on the previous slide, the Brazilian currency is testing has hit a new 2-month low against the dollar. It's within 1.25% of testing the 1-year low, and that was actually a 3-year low as well. So very similar currency patterns, and then you add into this what the treasury yields are doing right now, and it makes a lot of sense how these traders and financial participants, market participants, are coming in and trying to position themselves with the idea that the dollar is your best bet going into the election.
All right, I want to segue this into King Corn here to start. And, the corn market not moving a whole lot, feels very range bound. We had a good 2-week stretch there of flash sales. We ended that early this week. That constant run we had of export sales for corn. But you look at the weekly corn chart. What stands out to you here, Mike? What's the biggest thing you're watching on the corn side heading into election day?
What I see right there, Jesse, is something we've talked a lot about in a lot of your programs, and that is that big channel of downtrending resistance where you have lower highs and lower lows, that white band. That is called the wheat market, and that wheat market is very much in play again, both not just what we talked about in the last couple slides with the currencies and the crude oil and the Chinese stimulus, that the corn's picking up on all this. It's getting very big amounts of external noise to it, but it sure looks like that it wants to maybe try and at least go to a sideways trading range instead of a lower trading range. And so this is going to be the first chart after the dollar that I look at after the election. And it's going to be, do we break above the channel? Do we break above the purple 52-week moving average? Because that also is really nice. You and I've talked about before how when you get two technical indicators that run along with each other, that adds credibility and credence to the momentum and to the funds based upon my research. And so that 428 area, 435 area in corn, if we're above that a week from today in the aftermath of the election, that would be an extremely good sign, because I would bet that it's going to be because the wheat market has been let out of the gate on declining supplies and continued weather issues, because the dollar market, the dollar currency, is breaking against some of these major currencies.
Mike Zuzolo with Global Commodity Analytics is our guest analyst here today on Market Talk. Let's talk a little bit more about the wheat, and I want to focus in a little bit on what's happening in the Black Sea region. Here's a chart looking at the NDVI values for Ukraine. Well, and this is looking at corn too. So tie this all together here, Mike, in terms of corn, wheat, and some of these correlations that you're talking about that we've been looking at. I mean, what's going on in the Black Sea region in Ukraine specifically right now?
Well, while we've kind of gotten straightened back out in terms of South American weather, we have not gotten straightened back out. And this comes from an attaché report that was just released, I think, 2 days ago. And this is, as you say, a normalized vegetation index. And you notice that we are currently running at the very bottom of the 20-year band. And so you could argue that corn in Ukraine right now is one of the worst crops being grown in 20 years based upon this metric. And this has not changed for the last 6 months. It started with the wheat market. And in fact, one of the major private analysts, although they are based in Moscow, came out today and cut their Russian wheat export forecast closer to mine, coming in at just under 46 million metric tons. That was 1.7 million tons less than their prior estimate. And more importantly, it compares to about 2 million less than USDA's WASDE update. That's in the wheat. And so what I'm here to tell you again this week, Jesse, and the viewer out there, is that we are still, in my opinion, net losing global corn and wheat supplies, thanks mainly to the Black Sea and potentially due to us here in the hard red wheat belt, especially given the good to excellent conditions for the winter wheat being at 38%, Kansas being at 38%, and those emergence numbers being tragically low. Nebraska was 12 points behind in winter wheat emergence, Oklahoma 17, South Dakota 10. So it's a very wide-ranging issue that we have here in this country as well. So I still stick with the program we've been with the last 6 to 8 months. Beans are mostly the leader to the downside at this stage, although they should be able to bounce if the wheat and the corn do after the election.
Let's talk the soy complex too. I'd be remiss if we did not touch on the nice moves in beans and bean oil on Wednesday, but also soybean meal was a bit lower on the day Wednesday. So walk us through what you're seeing just in this overall soy complex right now, Mike.
A lot of people have asked me, why is the meal market getting hit so hard? And I really do think it's due to, in part, the Chinese feed sector. And that's why we've broken away from the pork and bean trade, with the hogs going sharply higher, beans going sharply lower. If I had to give one big reason for that, it would be this. And China is a two-pronged issue fundamentally. One is their livestock sector, their swine feeding production. The first half of 2024 was down over 7%. Their overall beef side of the equation, the ruminants, they were down 8.8% in the first half of the year. Their feeding is just not nearly what it was last year. When you look at all the animals, they're down over 4% the first half of the year, and they're probably going to see an even greater slide the second half of this year when the numbers come out based upon the USDA ag attaché, until they rebound early next year. So that's number one in China. Number two, I think, really goes back to that stimulus package and it being very disappointing. And so the beans have been very much caught up with the crude oil through the soybean oil market. And that's what changed on Wednesday, Jesse. This meal market has not come back. In fact, the meal market went down to $300.50 a ton here at the Merc, led once again by the Chinese market, as you see here. We're at the lowest since September of 2020 in the United States. We're at the lowest since June of 2020 in the Dalian futures that you see here in orange. But what happened Wednesday was the crude oil found some support, mainly on OPEC talk, and that allowed the soybean oil to really find a 2.5% gain, change the dynamic in the soybeans and bring us some short covering. But I do not feel good confidence in the beans being able to bottom here without the meal market. So we need a solid low in the bean meal before we can really start talking a major low in the beans.
All right. Well, you brought up my favorite term, the pork and bean trade. So I want to use that as my shameless segue into the hog market. Mike, what is going on in hogs? We've been setting new contract highs session after session, it feels like here, and really just feels like there's a lot of support under lean hogs right now. What are you seeing, Mike?
There has been, and it's mainly because the Chinese hog market has plateaued. It hasn't gone down. and that's been a big deal. I think also, Jesse, when we saw that cold storage report last week, it was tight for pork overall, but it was 40% less on the belly side of the equation. I think that really fed the bull because the bellies have been sharply higher in the aftermath of that cold storage report for the most part. We've kept an index, a lean hog index premium of about $5 over the futures going into the beginning of this week. It's narrowed dramatically now at midweek because of this parabolic move on the chart. And I think last thing I will say is I think that there's going to be a chance for lighter Q4 slaughter numbers coming. I'm still concerned about what's going on with the Southeast poultry and hog market in production because of those two hurricanes. Haven't gotten any concrete numbers yet, just anecdotal numbers. One media person just told me yesterday that she had done an interview and she talked to one person in one county in North Carolina, and they think they've lost at least 200,000 hogs. So I think that's where the trade is trying to price in a lot of bullishness. And you see this in the chart. This is a neat chart because you've got a normal trend line along with the 20-day moving average, and that's your orange and blue lines. Then you had a sharper, steeper red trend line that developed here at the beginning of this week, end of last week. And then we divorced ourselves from even that and have gapped higher as of Tuesday's opening. And that allowed us to go what I would say extreme or parabolic. And so I'm in a situation now with hogs acting this way. They're going to join their partners, the cattle market, in me getting fourth quarter hedges in place after this kind of a price move. Last thing I'll say about this as we get ready to talk about cattle is I'm not so sure that we aren't seeing the funds come in and buy these hogs, sell these cattle because of the election and because in the off chance that Vice President Harris may win, and then all of a sudden the methane issue and climate issues come right back to the surface in Washington ahead of the next farm bill discussion. And we have to be ready for that today, this week, before the election, if you ask me.
That's a good point. And thinking about cattle, I didn't necessarily think about that. Maybe we're seeing some selling, some spreading hogs against cattle here because this cattle market last couple sessions is I'm still a little uneasy about some of this price action. And I know we got some cash activity on Wednesday already, earlier than normal. And talk about this cattle market a little more in depth and what you're seeing chart wise right now, Mike.
You know, it was all about momentum for me, and we talked about this, I think, last week, and we failed after the cattle on feed report. I wanted 11.5 million head on feed or less. I got 11.6, the exact same number of last year, with 3.5% more weight on a dressed basis than last year. And then we had a cold storage number that didn't help us at all either. So we have ample supplies right now, and I think that's what really came out to me at the end of last week on those reports. So we needed the technicals and the momentum. We needed the stock market and the hogs to help generate the next leg up. It tried to go higher, but it failed. And I'd say this is a technical failure at this point because we made that wedge. We got almost to the very point of that wedge, and we've broken down now back through the prior highs. And we're roughly, I think, 60 cents, 50 cents from the lows in October as we close out the month of October in that December cattle contract that we're looking at here. I think at the end of the day, Jesse, I really do want to look at two things. And the first I already mentioned, why wouldn't funds who are at the highest net long position in live cattle since a year ago in October when we broke in mid to late October a year ago, if they're as long as they were a year ago, and we have an election winner that is more forceful on climate and methane gases, I don't know why the funds wouldn't want to take profit, and I wonder why they wouldn't even want to wait until after the election, why they wouldn't want to get more flat, kind of like what they've done in the grain complex. And so I Tuesday morning, sent out a text blast to clients and subscribers, high-level subscribers, and said, let's get our 100% hedged on the fat cattle. Let's do some December puts. They're not expensive. They could be good property a week from today.
Mike, excellent analysis and thoughts as always. As we close it out today, anything final you would want to share or reiterate with folks?
The only thing I'd like to reiterate is I hope this information helps you, but Jesse and I are only scratching the surface here. And I hope that you take a 2-week free trial or call me and get signed up so that we can work together and try this type of analysis out for your farm or ranch in 2025. I hope that it will be a big benefit to you.
You can go to GlobalCom Research, GlobalCom with 2 M's, research.com for more information from Mike Zuzolo with Global Commodity Analytics. Mike, always good to talk with you, sir. Thanks so much, and we will talk to you post-elections next week.
All right, Jesse, thanks so much.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.